All right, welcome back and thank you for checking out another episode here on the McHugh Insurance Group YouTube channel. Today, the topic I want to get into is life insurance related and more so really geared towards businesses and what's becoming one of the most popular topics that we're talking about with just about every business, and that is employee retention and how there are certain life insurance products out there that can be used as a tool to not only retain employees, but also to protect the business and to protect, your employees' families. And so really quick, I just want to discuss high level, and we could break this down a little bit further in future videos. But I want to discuss how one life insurance policy can provide three different solutions for your business. Now, these are often referred to as key man policies or some sort of private bonus plan. No matter how you slice it or whatever you want to call it, the objective is the same. And the growing popularity behind these types of policies is really the proof as to why they are so effective and how important they can be, not just to your employees, but also to your business. So when we look at this and we discuss the vehicle itself for what we're trying to accomplish here, it is a life insurance policy or maybe a blend of two different types of life insurance policies that are taken out on employees at your business. The first thing to know is that this isn't a group life policy. It's not something that you would be putting in place on every single employee. It is a policy that typically we put in place for the top 2 or 3, maybe 4 people within a small business. Meaning people who, if they were gone tomorrow from your business, whether it be because they went to another job or because they passed away, it would have a negative impact to your business's bottom line. Those are the people that we're discussing these type of opportunities for. And the first thing I do want to mention is that a lot of people, when this topic comes up, will think, hey, I can't do that. That's discrimination. And that is not the case. We are able to put these private bonus or key person policies in place for select individuals who qualify for them within your organization. So how does it work? Okay, as I mentioned, the vehicle itself is life insurance. And it is a life insurance policy on an employee within your company. And there are 3 different benefits that it can provide that make it extremely valuable for businesses and for their employees. The first piece we'll talk about, the easiest to understand, is the death benefit itself, right? Life insurance, as we all know, has some sort of death benefit associated with it. Now, that death benefit in itself will accomplish 2 separate things. Number 1 is if your employee passes away, your key person who we have a policy out for passes away, there are funds there from the death benefit tied to that life insurance that can do one of 2 things, or both. That money is often, when we set these up, split into 2 halves. Half of that death benefit would go towards the family of your employee, and the other half will go towards your business. Now, obviously, that half that goes towards your employee's family is self-explanatory, right? It is you as a business saying, hey, we care about you, we care about your family, and we want to make sure that something is in place for them. God forbid the worst case scenario happen to you, right? That is the first piece when we talk about retention and these life insurance policies of how it can have such a big impact. A lot of group policies out there for small businesses may have $10, $20, maybe $50,000 of life insurance. But if you put something in place on an employee that says, hey, if you pass away, we're going to provide $250,000 or $500,000 to your family, that goes a long way. And ultimately, it becomes a very difficult perk to walk away from if another company is not willing to offer it. The second piece with that life insurance death benefit, if your employee passes away, a portion of that typically is structured to go to the business. Now, what's the idea behind that? Well, the purpose of having life insurance in place that the business is a beneficiary of is so that you can take that money and find a replacement or two for that key employee that you may have lost. There are a lot of things that ends up getting used for. One is trying to attract talent, right? Whether that's paying recruiters, whether that's putting out job postings. And then the other piece is training, right? Depending on the role, there is definitely a gap between losing a key employee of yours and then bringing somebody on new. It can be used as a sign-on bonus. Whatever it may be, we almost always structure it so that there is a little bit of a pool of money there for you as a business to put towards trying to find a replacement for somebody else. So the death benefit, as I mentioned, is twofold in that it's going to obviously be a retention piece because you're putting something in place to protect your employee's family, but it also benefits the business to make up for any lost income and try to cut down on that in-between time where you've lost a key producer within your company. The second benefit to using life insurance that can benefit your business or your employee is the cash value that is associated with the life insurance policy if you were to put into place some sort of private bonus, personal life or permanent life insurance policy on that key employee. And again, this can have multiple uses, but from a structure perspective, again, the vehicle is still life insurance, but it is life insurance structured with the idea of trying to grow cash value within that policy that can then be used down the road. For an example, if we took out a policy on an employee who was 40 years old, somebody who's key to your company, your organization, they generate revenue, and we said, hey, we want to build up cash value in here so that down the road we can offer a handful of things, whether that be biannual bonuses, whether that be a deferred compensation retirement fund that is financed by the company, whatever it may be, to put that life insurance in place to grow the cash value that can then be used to incentivize that employee to stay or offer them some sort of deferred compensation when they reach retirement age. So here's how that looks, right? We put a policy in place on somebody, let's say they're 40 or 45 years old, they're key to your organization. Over time, that policy is going to build cash value as the premiums are paid. And there are a million ways you can structure it. One of the most common ones is, as I've mentioned, a deferred compensation plan, where once that employee reaches an agreed upon retirement age, let's call it 60 or 65 years old, the cash value that is in that policy becomes available to them to withdraw either in one lump sum or typically to avoid taxes. We may often distribute that on a yearly basis. And those numbers could be anything you want them to be. You could structure it and finance it to a point where they get paid out a couple $100,000 when they retire, or they get paid 10, 15 grand a year over time. And in small businesses, that is such an important perk because there are not a lot of companies, there are very few companies who are offering pensions anymore, let alone something like this that is a company financed retirement type plan. There's another bonus to that, but to put a bow on that, that is, from a retention perspective, the most valuable thing you can do. People talk about, hey, they want $1, $2, $4 an hour raise. I can assure you that $1 to $2 an hour raise is gone in the next trip to the grocery store, in the next bar tab, whatever it may be, and it is quickly forgotten about. But when you put something in place like this that says, hey, in 5 years, we're going to offer you a bonus, 5 years after that, another one, 10 years, 15, 20 years down the road, you're going to continue to get 5-figure bonuses paid out to you if you stay with our company, it's a no-brainer. And it makes it very difficult for your employee to have a conversation with their spouse and say, hey, I think I'm about leaving to go to this other company, when they know that there is some sort of bonus program put in place for them. The additional advantages to that, and there's a lot to discuss, but from a business perspective is you put that policy in place and let's say that employee leaves. Well, if that employee leaves, they're no longer entitled to the cash value in that policy. And as a result, the business now has an influx of cash that can be used to attract or hire or train new employees to replace the person you may have lost. It also, just from an overall accounting perspective, the cash value in that policy sits as an asset on the business's balance sheet. And it also helps, just obviously as you look down the road to your retirement and succession planning as a business owner, to say, hey, I've got somebody locked in, whether you're trying to sell the business or I've got somebody who may be a potential purchaser of my business from within the organization, and I am keeping them here with this type of life insurance policy. Okay. So to recap, when we talk about the 3 different advantages to using life insurance for business purposes from a retention perspective, the first one, as I mentioned, ties into the life insurance death benefit, and that is providing a benefit to your employee's family should they pass away. The second one is providing a benefit from the life insurance to the business should you lose a key employee in a worst case scenario, to try and hire, attract, or find new employees to replace the person you lost. And then the third component is that cash value, whether it's used for some sort of bonus plan or some sort of deferred compensation plan to help retain your employees. It is almost as foolproof as anything else out there. You could set up a 401k, but how many of your employees would actually contribute to it? And what are the overhead costs associated with it? And what if your employee leaves, right? You could give them $1, $2 an hour raise, but in 6 weeks, when that's been eaten up by inflation at the grocery store, at the bar, you name it, or at the gas pump, that person is very likely to still go back out and look again for other opportunities. But when you put something in place like this, that from the employer to the employee says, we care about you, we care about your family, you are valuable to us, and here's how we want to reward you. We want to take care of you and your family. We want to offer you bonuses down the road. And when you look at the numbers for all of this, it is the most cost-effective way to do it. Okay? More to come on this, but if you are out there as a business and you are having trouble finding employees or retaining employees, this is one of the most valuable resources that you can use, that is at your disposal, that you need to consider moving forward. That's it for today. Thank you for checking out another episode. Be sure to like and subscribe and stay tuned for future content.